Bring in our experts. Adam Parker, he's the founder and CEO of Trivariate Research. Tom Lee is the managing partner and head of research for Fundstrat. Both are CNBC contributors. We're lucky to have you both together today. Welcome, guys. All right, Adam, just give me your assessment as you watch what is a increasingly headline-driven market.
Yeah, I mean, look, as you know, we think it's going to be choppy. I'm still optimistic that on the other side of this, we could get back toward, revenue growth and beneficiaries on the AI front with productivity and margin. So the call we've had is choppy here in the first few months. Then once the management teams understand what the policy backdrop is, they can, deploy productively capital. So I choppy first half, and then we probably get a resumption of pretty good growth.
Tom, you've tried to remain pretty optimistic through all of this. Are you still?
Yeah, I am optimistic. I can understand why investors are sitting on their hands. They don't really know how severe these tariffs are going to be, how long they are, but now we're seeing a big price correction, a decline in sentiment, and then something like today, we got a bad ADP jobs report, and the market's actually up, so we're actually rising on bad news, which is a good sign that a lot of bad news is priced in.
But do you agree with Adam that the first half of the year is likely to be a little more choppy, and that you can get through some of these issues here regarding trade, and then you look down the road to tax policy and think that, okay, well, that's going to usher in a better back half of the year?
In fact, what's just happened in the last
tax policy, excuse me.
Yeah, what happened in the last 6 weeks is essentially a bear market that has swept through sentiment and positioning, right? Because if you look at hedge fund positioning, it's gone almost neutral, and a huge correction in momentum. So I think it's very possible that March, April, May could actually be like one of these huge rally months where we're rallying 10, 15%.
Even in March. As we're sitting here, we're going to be driven, obviously, by more tariff headlines. We do have to consider the fact that earnings could take a hit. Do we need to reassess that?
Look, I think if stagflation were a stock, it's up off the low. That's why the market has been choppy. People are worried about, a slowing economy, Walmart, consumer confidence, retail sales looking a little light. At the same time, they're worried about, higher prices. I don't think that's ultimately what's going to happen.
So you'd be short that stock?
I would be. I just don't know. Maybe I think Tom is short it today, and I maybe would say it's I maybe would be short it in a couple months. But I think we're in the same mindset that we'll get on the other side of this at some point, probably in the second quarter. I just think it's hard to get through it until we really understand. If you're the CEO of a company that's a big company and you've got facilities and customers in Canada and Mexico and China, et cetera, I just think you're a little bit, I like his phrase, sitting on your hands a little till you understand a little bit more about how to most productively deploy capital. I think that usually takes probably through April earnings and guidance, and then I'd probably kind of be more optimistic that we have a certain path. So we're in the close enough for, government work, if that's a thing.
You might be losing.
Yeah, exactly. We might get dosed.
I don't know if that's so bullish for you.
I'll take you too. I'll take you too.
It's one thing for CEOs to be a little skittish, be a little more cautious. That's what they get paid to do. Investors often have to place their bets before something takes place. Is this a buy, this unsettled market that we've witnessed recently?
Yes, in my mind, we put out a piece yesterday just talking about the 10 best days that happen every year. Last year, for instance, the 10 best days added up to 21 percentage points of the S&P. X those 10 days, the market was only up 4%. So, you don't get 20% years because it's good through the year. It's just the 10 best days. I think the setup for a 10 best day is near because if the economy's near stall speed, I think people realize the Trump put does come back because otherwise, it has to unwind all this austerity. And if the job market's soft, the Fed put comes back into play because the Fed doesn't want to play with stall speed. And I think that's what is going to be the positive catalyst in the next couple of weeks. And on top of that, we already know stocks will bottom before bad news peaks. And so if we're seeing the market not fade on bad news, that means we're already priced in a lot of things that would scare us.
Tom Lee is here once again to deliver the hard-hitting truth that Nvidia and Nvidia holders won't like to hear. And it all relates to how, despite outperforming expectations, Marvell Technology's shares took a sharp nosedive, leaving investors to grapple with the realization that Wall Street's demands are higher than ever. Names like Nvidia, AMD, and Credo Technology are also swirling in this electric dance of numbers and forecasts. What is the truth behind the market reaction? Tom Lee has the answer for you. Welcome back, everyone, to Investocracy.
Our chart of the day is Marvell, which gave a very disappointing revenue forecast. The stock is plunging. I mentioned the SMH is below its 200-day moving average. It's down 10% over the past month alone. It's down 20% from its high, which takes me to Broadcom, which is down again and reports tonight. How important is Broadcom's report at this moment?
I think all it literally would do is give it a little bit of a bounce. I think the dynamic surrounding the semis is well entrenched. We've negated a lot of the bullish trends. It looks to me as if Nvidia has been the one name somewhat insulated from entering a significant downtrend. I'm not saying it's still in, the short-term uptrend. Longer term, it is in an uptrend.
Well, guess how much it's off. Guess Nvidia is 27% off of its 52-week high.
Yeah, and
guess how much Broadcom is?
Broadcom
27%.
Right. So, and those were the two names perceived to be the winners. Those are the two names to perceive to be on the valuation basis the better one. So all I can tell you is we've been slowly reducing our exposure to semis. Given what I've witnessed in the current quarter, I can't imagine we would be increasing exposure to the semis themselves. We own 5 names at this point: KLA Corp, Applied Materials, Qualcomm, Nvidia, and Broadcom.
This is a full-blown bear market. The median name in the SMH is right now in a 34% drawdown. The median name, which means a lot are significantly worse. So I don't know that it's the all clear to just close your eyes and buy them yet, because you could have oversold stocks get more oversold. This could be a downtrend that lasts longer. The median RSI among these names is still 41. I want to see that 31 before I just say, you know what, I don't care what's going on, one of these stocks to buy. I just don't think we've gotten to the bottom yet.
Doors swung wide open to the possibilities of artificial intelligence. Companies like Marvell Technology are caught center stage under the glaring spotlight. One might say the market feels like a high-stakes poker game where every card counts, and Marvell's recent report seemed to reveal an ace up the sleeve, a small beat and raise. Yet, to the investors hoping for a royal flush, this merely felt like a pair of tens, lacking the expected grandeur. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
What is unique about this time period is Marvell. This time last year, they had $765 million in data center revenues. They had $1.365 billion. NVIDIA crushed numbers. AMD is crushing numbers, but the market's like, we don't care.
But this is why when you've had money coming out of semis, there has been more optimism about software. The great comeback that CrowdStrike had really took a beating the other day. UBS cuts the price target, Josh, to $425. It's only a $25 drop down, but nonetheless, this stock had been in a nice uptrend, and here we are questioning it maybe at the moment.
Yeah, look, it's in this cohort of high beta, high octane growth stocks, and when they sell 8 of them, the other 2 don't get spared. These things are traded in baskets. Also, you have a sell the news. You have a company that had really good earnings, but everyone expected them really good earnings. You know that based on how much the stock had gone up over the prior 6 months. So that's really all it takes. Sell the news, profit taking, momentum washout. Why would CrowdStrike be higher? Makes no sense. What I do in situations like this, I already own it, so I'm not adding to it. I own it in the hundreds, low hundreds. But take the $361 mentally and just say, all right, it's a $36 stock. The average Wall Street price target, let's say, is like 420 to 440. Can a $36 stock recover quickly to 42? Yes, obviously, yes. So it's a big dollar amount. The shares have pulled back in the last week or two. But in the grand scheme of things, we're still in a major uptrend here. And I would not be reacting to sell-side price target cuts.
Take Nvidia, for instance, a leader in AI processors, which found itself in February's whirlwind. Despite a robust report with earnings and revenues surpassing estimates, investors exhibited a collective gasp as stocks experienced an 8.5% dip. Was it the natural fluctuation of the market, or is it a testament to the astronomical bar set for these tech titans? But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
NVIDIA may be the most hated stock in the universe, every retail person trying to run from it, ahead of the GTC, the big conference,
right,
in 10 days.
Right.
So I thought the winner was definitely Broadcom, but it also made me think that maybe you should start paying attention to NVIDIA from an earnings per share side. Because if you have that many hyperscalers, it could be better.
I mean, yes.
I hate to say it because I like it so much. I'd like to see a whoosh down in NVIDIA. And we have.
So you don't think 109 was the short-term low?
Yeah, I'd like to see everybody out of it ahead of when Jensen Huang reveals why we want to own Blackwell and Rubin.
We do have that death cross on the SMH.
The death cross,
that was fun yesterday.
Yeah, the Holy Sepulchre. I don't know. David, I know you look at the death cross and the golden cross.
Always.
And
I'm the head and shoulders.
Yeah, and the cross of gold.
Reverse head and shoulders.
Where's the cross of gold?
I also like the old double reverse Mars Trust. That's a good one.
Amid the complexity and volatility, one thing remains clear. The AI boom has proven to be a fertile ground for those with insights to navigate its ebbs and flows. With predictive models forecasting continued growth in AI application sophistication, these chip makers stand firm as critical enablers of tomorrow's technological landscape. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.